Hello, I'm Kevin Ball from FXTrading Company, and I'd like to take another look at the currency pair euro-dollar and the dollar index. If we look at the first chart that we looked at on the 31st of July, a couple of points I'd like to just mention. You'll notice it was mentioned in that discussion that the RSI at the bottom of the chart had returned to what has been labelled as a trend line connecting waves A and C and E. And the dashed line was the expectation for the currency pair to potentially rally from that position. If we come forward to the second chart, we can actually see what price action has taken place. So the oscillator has just punctured just below that red trend line, and at that point has then rallied for 200 pips. Now, if we look at the left of this chart, because we are still correcting the decline which commenced from the February 2018 high into the August 2018 low. If I was to label this chart now from an Elliott wave perspective, I would say that we have had an ABC to produce a zigzag to a high on the 28th of September 2018, and then I would label this that we've had what would be termed as an ending diagonal for a B wave, connecting waves A, B, C, D and E. And if we look at the potential termination of the E wave, which would then complete the B, there is an expectation or a requirement that there is a missing C wave, and just above you can see now a dashed line with an anticipated rally in euro-dollar, and there is a question mark there and a question at the top which is saying where is wave C. So that's a very interesting setup from that perspective, because it would place euro-dollar potentially for a rally for a number of months. If we look at a chart in the dollar index which would provide the inverse of this position, we can actually see the following chart. And if you can see here, the B wave low in the euro-dollar has produced a high in the dollar index, and as we've connected the lows in the euro-dollar, you can see the inverse in the dollar index. So we can see waves A, B, C, D and E, and again that upper trend line connecting waves A and C in the dollar index, and when that's taken place, the market has so far declined. Now at the top right hand side of the chart, you'll see the word throwover. And what that actually is that R.N. Elliott wrote in the 1930s when discovering the wave principle that wave E can throw over the trend line of wave A and C, and then the market retraces, which is what we've seen take place if this count and perspective is correct. Now just to the right hand side of this chart, you'll see two vertically dashed lines, and it is in there that we have the 5-wave impulse wave as seen in the dollar. Everything to the right hand side of that second vertical line is merely correcting that impulse wave, and it is that correction that these charts are looking to understand when that may be complete. If we look at the final chart, which is a chart of the dollar index again, the rally which is anticipated in the euro-dollar would transpire to be a decline in the dollar index. And again, this is a monthly chart in the dollar. You can just see that 1, 2, 3, 4 and 5 on the dashed line to see if that position unfolds. And the blue line just to the below and the magenta line just near those dashed lines is the 50 and 61.8% retracement. So we'll continue to watch and update this position as it unfolds over the coming weeks, but if that is correct, we'll look to see if the correction does complete and then see if the dollar index continues to rally.